Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I think there's a really good question here that I'd really like to answer. I'll give you my financial opinion on it. It says, do you think average commodity stocks in precious metals, oil, uranium, base metals can double in 2022 with a bull super cycle? Uh, See, the difficult part here is when people put time frames and they compress it down to a very short time frame. I don't know for sure what the movement will look like, but I can tell you that we're going far higher over time based off of a couple of things that I look at. And I'll show you those things I look at and what maybe what my thoughts are. And I'll jump in here and give you my thoughts. And the best way I can do it is to show you through charts because that's how I interpret the data. This is just raw data and how I interpret the data. Now, this is the producer price index by commodity. And what that is, it's basically the commodity price going up. And this will feed itself through. So think of it this way. Commodity prices first go up. Everyone kind of sees that. We've seen it in all these different commodities. The commodities are the inputs for the producers. So in the producer price index, we'll see these prices rocket higher. And when these prices rocket higher, it means that the inputs for producers go far higher, and eventually the prices will have to go up from those producers. So you should see the consumer price index follow the producer price index. And this is kind of, we'll call it the leading indicator of what I think might happen. So what I did is you could say consumer price index is kind of the laggard of everything. And that's the laggard behind that is interest rates. So it's interest rates, consumer prices, producer price index, commodities, and then the credit expansion from the expansion phase of real estate. That's kind of how it goes down. So if there's an expansion of the money supply, that's going to be inflationary, and it shows itself in commodities first, in PPI second, in CPI after that, and then rates will be adjusted based off of the consumer price index. So the rates are just delayed behind it. And then the rates impact how investors view and price assets. And that's at the end of this domino effect. So when I look at these things, and we see the producer price index, in between these large moves, these consolidation periods are very large moves higher. So from the 1940s, we had a big move in the 1970 to 1980, and then the 2000 to 2008. And then we have a massive move here this past year here of a massive move higher. Delete that out. This big old move higher. So what this is signaling is that we're going to get high CPI numbers, and it's going to be sustaining because this PPI continues to go up, which means the CPI will continue to go up. And we're seeing inflation, the M2 money supply, which is the driver of all this, rocket higher. And it's being sustained higher. They're continuing to print money at a clip greater than 13%. I don't know what the consumer price index will necessarily show, but that number is over 13%, and it went all the way up to 23%. So that's the driver of it. Now I know I'm going in this so you guys understand how this all functions and works, and all this kind of feeds through it. So when you're saying, can this stuff go up? Can we see a lot of these mining companies go up another double or whatever? Gold on a long-term perspective, when looking at this and how this kind of consolidates and consolidates, when you look at the timing of 70 to 80 and from 2000 to 2008, and then what I'm saying is we had a bull market start in about 2019, but it got impacted by the medical event C19. I think we're going to rocket higher. And we could see things that are far more than a double or triple in a single year. The problem is pinning it down to a single year is very difficult. So, I mean, maybe we go up, maybe we go sideways a little bit more this year in 2022 coming up. Or we could have a stellar year and this takes off and blows in a third wave of Elliott wave. And when I think about this, this could be a wave here. We consolidate and then we have a massive third wave coming. If that's the case, we could see a monster move in 2022. And it very well looks like we could. And this is gold that I have behind me. So those companies, they could go up 400, 500, 600% in a year, depending on the size of the company, depending on the favorability that they have in the market. We could see a big move higher. Or maybe this drags out a little bit. I don't think it will, but I think gold will be an excellent investment opportunity this next year if we break out of this pattern, and it's just about to break, I think. And hopefully it breaks to the upside. It could very well break down and consolidate a little bit longer. It's possible. So that's gold there. Now, silver. Silver is going to follow gold, and what I did is I redrew this. And what I redrew here, I can grab this and get these little drawings out of here. I drew this in here, and we could be consolidating just like gold. This is 1, 2, and a 3 hump, and then we break and move on up. But this could break down. We could have some sort of scare, a variant, whatever it may be. But I can tell you structurally that this is most likely going to go higher with this big ol' moves here. Again, the PPI is a leading indicator, 70 to 80, 2000, 2000s. So this one took off in 01, basically 02, 03 and up. It's kind of a laggard. Does this lag and go sideways a little bit over the next 2022? It very well could. So I can't tell you the exact timing, but this is going to be a big move when it hits. And it may be delayed a little bit. Sometimes it lags a little bit. But that lag could be from 2019 because we already took off. So this may just blow out to the upside. It could. And platinum, I think, is the highest probability of getting that nice big move because it usually moves quite off, right off the beginning, quite strong. You might get a pullback and then it goes. It came off the market strong in it was starting to go in 2018, 2019. I thought we were going here. I started buying in, looking for the break. We had the event, which I bought even more, and I'm still a buyer up here, and I think we're going to see a big move in platinum. So in 2022, could platinum companies go up quite a bit? I think so. It very well could. And this is why I own everything. I own gold, I own silver, I own platinum, physical metals. I own the mining companies. And they all could easily double or triple or quadruple. They could. But I can tell you, I don't know for a fact. But the charts all look quite compelling. That's all we have to use. Looking at oil as a commodity, this thing looks absolutely ridiculous. And what you want to look for is a break of a large pattern. You buy in the pattern or on the break of the pattern. That is your lowest risk spot, is to buy a back test over here. And that's exactly what we're doing with oil. Oil in this size of the pattern can do massive things because what that pattern does is it provides a base to launch from. Think of it as like jumping. And what you want to jump from is you want to jump from a hardwood floor. You want to jump from concrete. You want to jump from something that's solid that you can launch from. If you try jumping from water, like if you were to run onto water and try to jump off of it, you wouldn't go anywhere. You'd sink right into it. It's not a base to jump from. In trading, you want to look for these big bases, and you want to be able to jump from it. So could oil go absolutely ballistic this next year? It could. We're right there above this gigantic pattern that is sitting there. We're right above this big pattern here, which we're sitting on top of, that which we could basically compress our legs and jump off this thing. And we could get a very big move off this. And again, guys, remember, this is only probabilities, but everything is aligning for this to move to the upside and be a very big move. Natural gas is doing the same thing. It's got this big old base here. It broke out. That's step one, is to break out, and then it comes back and does a retest. It's retesting right now. So when you look at these retests like this is a base to jump from. It is a large base to launch from. And I would not bet against natural gas or oil next year. And you could easily see 3, 4, 5x It's possible. I don't know what will eventually return. Don't hold me to that. But the possibility is there. And that's why you got to get, in my opinion, I am invested in it. I hold on to it, and I'm going to ride it higher. Oil could do incredible things next year, especially the second half of 2022. If the demand exceeds pumping capacity, it's going to be ridiculous, guys. It's going to be ridiculous. And I don't know if that's going to happen in 2022. It could happen early 2023 or the summer of 2023. The timing isn't as important to me because the risk rewards are so large here. We're talking about massive moves that I am very interested, because if you get a double in oil, if oil goes to $140, $150 or whatever it is, and by next year or 2023, that doesn't mean that the companies are going to do that. The companies are going to do way more than that. And some of these high cost producers, they may do another 10x, 8x. I mean, it could be quite substantial of a move. And I'm not claiming those moves. Please don't hold that to me. But some of these small ones that are still at a very good valuation could do those types of moves in a single year. I'm not claiming them. I'm just saying they could. But a 2, 3x, 4x, 5x, it depends what oil does. But it's positioned to do it. And natural gas could go crazy next year. So it's very difficult to say, if natural gas performs like Europe or something like that, then some of these companies are going to go ballistic because they have got 50% natural gas, roughly, and natural gas liquids. So it could do some crazy stuff. It could. Looking at uranium, uranium's the same thing with SPUT. We're breaking out. We're doing a little turtle head here, and we're kind of popping out the top here. If it gets some momentum, we could see some crazy moves. There's possibilities that you see a double or triple in a very short period of time. It could be in a couple of months that you could get a double or more. I don't know. I don't want to, again, I want to claim this. I'm not calling for it. I'm just saying the possibility is there. And that's why I've got my money invested in it and holding on. And that's in uranium. I think uranium, if we break here and move, we could see a big move right now, right ahead of us. Looking at, scroll down here a little bit more. Lumber has been on a tear. This is the price of lumber. We had a massive breakout from 93 till roughly today, and we're breaking higher here in lumber. And recently, lumber has broken out again to the upside. It's running again. Now, is this going to be sustainable at these prices? I don't know, but it's running. It looks good. Nickel. If nickel breaks out of this pattern, now we could see this pull back. I mean, this is an ascending wedge type pattern. We could see it pull back, but we could also break to the upside and see something that's just absolutely ridiculous with this. We'll see what happens. Palladium, I think, is going to be under pressure for a little bit. That wouldn't be my first pick. The reason is we have an ascending wedge up here. This usually goes counter to the market. But I will say there are deficits in palladium, and it still could go up. The fundamentals of it. I mean, looking at cocoa futures, we have a massive pattern developing here, which can move to the upside. Just a massive, massive pattern. And this is going all the way back to the 1980. And if you break this pattern here to the upside, it's going to be ridiculous. Now, this may take another year to develop. We could be early. Man, you want to be early. You don't want to be late. You want to buy on these before it breaks, and then they launch. You want to be invested in here. This is wheat futures all the way back to 1980. And soybeans are doing the same thing. And corn futures it's going in this sideways pattern, but we've broken the big line. We're going sideways, and we're probably going to break again. Here's copper futures. Copper is going to probably launch very soon. It's doing it right now, right in front of our eyes. It's going on up. Looks fantastic for a big long-term move. So we've got all these, they're all aligned. They look very good for a launch. I think we could see a very large move in a lot of these companies over the next year, maybe even starting now. what I try not to do is I try not to time these things to the nth degree. I get positioned. I remain patient. Are the market conditions in place? Does the PPI still go up? Is inflation going up? Is the expansion phase of real estate in check? What's the M2 money supply doing? Look at those leaders. Now, if you look, and I'll pull up on long-term trends, longtermtrends.net, we can pull that up there. And what you want to look at is your M2 money supply. So you scroll down, M2 money supply growth. We click on this. We want to look at the right-hand side of this. And see how this went all the way up to 25%, 24.8, 25%, 27%, and then it's dropped down, and now we are looking at 13% here. We're still printing at 13%, or money in the system is still growing at a 13% clip. That is a very high rate. This is the driver of it all, right there. 27%, 24%, and then 13% down here is what we're growing at. That is the leader, and we'll go into commodity prices, PPI, CPI, and into interest rate determinations, and then interest rates will be felt by the market, and money starts to rotate differently. So your M2 is the driver of this. Whether it's fiscal spending, whether it's spending by whatever measures, or it's bank lending against homes, credit expanding, which is creating that M2 money supply. Doesn't matter where it comes from, as long as that thing's moving up, it's creating conditions for a commodity bull market to happen. Don't get caught up on the timing of this, because just be patient. Position, spread out in your most favorite sectors that you know you can hold on to. You see pullbacks, this is buy the dip mentality in a bull market that's coming. The buy the dip mentality in bull markets. You don't want to buy the dip on a bear market. We're in a bull market. It's coming. We've broken down trends. We can see it in all of those patterns that I was talking about. So it's important to don't be impatient. The impatience will hurt you. Position out and be ready. And if something happens to the downside, be ready for it. Be tough. Know that the structural underlying conditions of this market are strong. Know that we've got the M2 money supply. The way that they're going to try to slow this down is by lockdowns and scaring people and fear and stopping travel and trying to slow the demand of oil use, the demand of whatever they can do to slow it all down. And they're going to blame supply chains. They're going to start blaming everything. The money supply behind me has rocketed higher. This is going to feed itself through everything. All of the ratios look fantastic for commodities in terms of valuations. All we got to do is wait. And patience is what makes you money. Being patient is going to make you money. Impatience won't. The patience and being right and sitting tight, that is the right mentality. So that's what I've got for data for you guys. It could easily double or triple next year in 2022. That's my expectation, but I don't know what's going to necessarily result. I think we'll see a good market, a strong market next year. But I don't know for a fact if something happens. Anything can happen. We got all this weird stuff going on. We could even have riots. I mean, there could be so many things that could happen that we're seeing around the world that could happen. But I expect a strong market if this persists and everything remains the same as today. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.